Hello guys, welcome to another YouTube video on the Elion Forex YouTube channel. Before I proceed, I would like to give a major shout out to everyone who has been supporting us on this channel. We appreciate your love. We thank you for your subscriptions, for streaming our videos, for liking and for also dropping your comments. We appreciate your feedback. So if you are not subscribed to this channel, kindly hit the subscribe button and leave a like on our videos. We really appreciate you. So today I'm going to be talking about market structure. So this video is in two parts. The first part is going to be about basic market structure, while the second part is going to be about complex market structures. So if you want to understand what a complex market structure is, I would advise you to hang on and we'll get to that point. So without wasting further time, let's just get right into it. So you would agree with me that structure is a very important thing to understand as a forex trader, and this is because when you understand the structure of the market, you are able to determine or identify the flow of the market. And when you are able to identify the flow of the market, you tend to get high probability trades that can make you a successful trader on the long run. So today we are going to be looking at the basic market structure first, just like we all know. But if you are hearing about this for the first time, I'll walk you through it and you would understand it. So there are actually three ways by which the market moves. Is either the market moves up, the market moves down, or the market moves sideways. So if the market is moving up or moving down, we say that the market is trending. But if the market is moving sideways, we say that the market is ranging. So when the market is moving up, we say that we are in an uptrend. And when the market is moving down, we say that we are in a downtrend. So now if you look at my screen on this part, this is an example of an uptrending market, because in an uptrending market, we want to see the market create a high, we want to see the market create a low, rather we want to see the market create a low, we want to see the market create a high, and we want to see the market break the previous high, showing intent of higher prices. And when we see this in the market, we identify this low that the market created as a higher low, because this low is higher than the previous low, and the market also prints a higher high, and we call it a higher high because this high is higher than the previous high. So this is a higher high compared to the previous high, this is the higher low compared to the previous low. So that is what this means. So we see the market create a higher low, a higher high, another higher low, another higher high, another higher low, another higher high, and the market creates it in succession. And we can now say, when we see this kind of structure, we can now say that the market is trending up. While on the other hand, when the market is trending down, we want to see the market create a high, we want to see the market create a low, we want to see the market create a lower high, that is a high that is lower than the previous high, and we want to see the market break the most recent low, giving us a lower low, because this low is lower than this previous low. So now the wave by which the market is moving is denoted this way. We have a high, we have a low, we have a lower high, we have a lower low, we have another lower high, we have a lower low, we also have another lower high, and we have a lower low. So the market, if the market continues to do that, we can now say, okay, this is a downtrending market. So this is a very basic market structure annotation, but the market does not always move like this. This is a textbook example. The market does not always move like this, and it is because the market does not move like this, that is why we have complex structures in the market. And when you have complex structures in the market, a lot of people tend to get confused, and they ask questions like, where do I identify as my lower high in a downtrending market? I can't seem to identify my higher low on this uptrending market, and questions like that. So that is why this video is made, to help you clarify um those kind of structures. So without wasting time, let's get into the real thing. Don't forget, if you are not subscribed to this channel, kindly hit the subscribe button and leave a like and also a comment on this video. We really do appreciate you. So now moving into the complex market structure, as you can see, you see that this structure on my chart is different from the one we talked about earlier, because there we were just getting everything so simple. The market just kept creating higher lows and higher highs in an uptrending market. But in this case, we are having a more complex structure. And why is it so complex? Because looking at this here, we had the market create a low here, and after the low we saw the market create a high, and after the high we saw the market create a higher low, and we saw the market create a higher high. We also saw the market create another higher low, and we saw the market create a higher high. This is another example of the basic structure we explained earlier. But if we look at this place, instead of the market to immediately create a higher high, we didn't get the creation of a higher high. Rather, we saw the market doing this, breaking internal structure, because a lot of people, after they see this break, they identify this place as their high, and they identify this place as a lower low. But looking at the market structure, this higher low is still intact. It is until this higher low breaks that we can now start saying, okay, probably the trend is changing. But while this higher low is not broken yet, the market is still trending up, even though we are seeing a break of structure to the downside here. What do I mean by break of structure? A break of structure is when the market breaks the previous low, a previous low, or a previous high. So in this example, a lot of people might have marked this as their break of structure, and they might now start saying stuff like, oh, let me leave drawing mode. Sorry about that. Okay, and you see them say stuff like, oh, the market direction is about to change, just because they had a minor break of structure within here. But as long as this low is untouched, as long as this low is untouched, we are still trending up. So how do we identify the right higher low in this kind of situation? Because people might ask questions like this, that is this going to be my higher low, or is this going to be my higher low, or is this going to be my higher low? Because we have three lows here, because at the back end of a higher high, we expect the market to create a higher low and now continue to the upside. But in this case, we don't just have one low. Adibin, we had one low here, and we saw the market do this. It will be very easy for us to identify this as our higher low. But in this case, we have about three lows. So the question is, how do we identify the higher low? So how to identify the higher low is that a higher low is not valid, or a higher low is not a higher low, except it breaks the most recent higher high. I'm going to take that again. A higher low is not valid, or a higher low is not denoted, except the low breaks the structure, or breaks the most recent higher high. So what do I mean? Remember, in an uptrending market, we want to see the market break highs, because it is when the market breaks highs that we can see that the market is moving up. So in this case, this high was broken. This was the low that broke the high. Let me use my brush too. This low broke this high. It is because this low broke this high, that is why we identified this as our higher low. Also, we saw that the market broke this high also. So the question you ask yourself is, what low broke the high? So in this case, this was the low that broke the high. So because this is the low that broke the high, we identify this as our higher low. So the question we are going to ask ourselves here is this: is the high being broken? We can see that the high has been broken with this move, and we ask ourselves that what is the low that broke this high? So on our illustration, we can see that this is the low that broke the high. So this is our higher low, not this, not this. So I believe that makes sense. So that is how to identify complex structures in the market. So you want to see highs get broken in an uptrend, and after you see highs get broken, the question you ask yourself is, what low broke that high? So when you identify the low that broke the high, you can now call that your higher low. But I also see some people do this. Let's assume that after the market has created this higher high, the market starts retracing. Immediately they see that the market is moving back up, they immediately identify this as their higher low. That is very wrong. You cannot identify this as your higher low except this high gets broken. It is when this high gets broken that we can truly identify this low as our higher low. So as long as this high does not get broken, we don't need to start looking for a higher low. So it is at this point where this high got broken that we can now start saying, okay, where is the higher low? And this is the higher low. So while we are waiting for the high to get broken, it is important to know that we are trading in a range. And where is the range point? We are trading between this structural high and this structural low. So we wait for the break of structure to the upside, or in some other cases we could see a break of structure to the downside and the downtrend is going to start. So now let's look at the sell angle of things. Here we can see that we had the market create this high in the market. After the high, we saw the market printed the low, and after the low we expected the market to create a lower high, and now are we able to confirm this lower high? We confirm this lower high because the market broke the last low, broke the structure, this because this was the structural low. So we had the market break this last low. So it is until when this low got broken that we can regard this as our lower high. The same thing also applies there. When this low got broken is when we can now say this is our lower high. So I believe that is clear enough. So when we got here, we saw the market create. Okay, I think I'm missing something. So this will be our lower low. Let me clone this. Let me clone this. Clone. All right. Lower low. Lower low. Yeah. So back to where I stopped. So now we could see that the market has been creating lower lows, series of lower lows and lower highs. We had the lower low here, we had a lower high, we had a lower low, and after a lower low we are expecting a lower high. But let's assume that this had not formed. Let's assume that this was what we had on our screen. We had this, and we had a retracement, and we had the market coming back down. The market coming back down does not signify that this is our lower high. It is until this low gets broken before we can now start looking for a lower high. So even here is not our lower high because this low is still yet to be broken. So not until this point where we had this break of structure, breaking this previous low, that we can now start searching for our lower high. And the question we ask ourselves is, where is our lower high? This is going to be our lower high because obviously it is the highest swing point at this place. So because this is the highest swing point at this place, in this structure, we can identify this as our lower high. So that is how to identify lower highs and higher lows in the market. So for those that trade supply and demand, you can now start saying, okay, after I see this break of structure, I might look for the opposing candle or the candle before the momentum that caused the break of this structure, hoping that the market will trade back into it to give us a sell trade to the downside. So it is essential you understand how this structure works. It will help you understand the flow of the market because looking back at this sell example, a lot of people, because they saw this minor break of structure, let me use the brush tool, because they saw this minor break of structure here, they might identify, for those that trade other blocks, supply and demand, they might identify this as their other block probably, and when the market taps into it, they execute buy trade there, you know, hoping that the market is going to continue going up. If it was a scalp trade, then no problem, but most of them execute it hoping that the market will continue going up, only for the market to reverse, stop them out if they are not break even. So having it at the back of your mind that a lower high is not created except a lower low is broken will save you a lot of pain in the market. So I hope you use this knowledge in your trading. If possible, add it to your trading strategy or your trading plan. So don't forget to like this video and subscribe to our channel. If you enjoyed this video, it will encourage us to put out more content, more educative content out there. And if you have any opinion or you have any comment to make, or there is anything you don't understand from this explanation or from this video, you can drop a comment in the comment section below, and I will make sure to attend to them. So thank you for joining me, and see you in the next video. Peace.